Hello guys, welcome to my YouTube channel. Kindly watch till the end, turn on the notification bell, subscribe, share to family and friends, and let's keep growing together. Cheers. Alright guys, welcome to another video of how to analyze your charts accurately. Right, from the previous video where we took Euro USD and we did an analysis on it, and I also told us that I will place in my pending order, or I'll take it directly when price reaches that place when I see a rejection. If you followed that analysis and you plotted all the Fibonacci and all that, you discovered that price just came in from, price was here that day, price came from here and entered our point of interest, and here we are. Price has moved 130 pips. 130 pips from that day. Okay, so it's this to tell you that what we are doing works, all right? So that you won't think it is a guesswork or you're just trying to get people to watch video and all that. This works. It works on all pairs. It works on anything that you know has chart and candles. So today we want to look closely at the gold, and see how we can analyze gold for the new month, the moves of gold for the new month and all that. So let's go to gold and let's start working on it. Let me mark this out properly so that yes. I think this was how we used it that day. And I said it is to keep coming down, but this is my first take profit. First take profit is 129, 130 pips already. And we plotted our Fibonacci and we said this is our point A, this is our point B, and point C is unknown. Point C is our point of interest here. Our point of interest printed a rejection on H1, and that's where I took our shots. And it also has an order on lower time frame there. H45, M45, there is an order here. Shows another where the sellers took advantage of took over the market, went down, needs to be filled. When the order was filled, continue the original trend, which is a downward trend on the monthly time frame. Okay, so let's go to gold and look at what gold is doing. Gold. So gold, we start from a monthly time frame as usual to get the general bias of gold. Gold is a safety asset. What that means is gold is where people hedge in their money in situations of recessions and bad economies against inflation and all the economy hazards that has to do with economy. Okay, so gold basically has been bullish, and the reason why it has been bullish is because many people save their funds in gold. Okay, see, even if it's going to be bearish, it is going to be for a temporary time. All right, so we consider it as an asset that is always bullish. Gold and your US30, they are always bullish. All right, so we are seeing, but temporarily gold can be bearish. Temporarily gold can be bearish. Temporarily it can be bearish. but let's mark out our most obvious levels, equal highs, equal lows, and take advantage of it. So temporarily, gold can be bearish, like I said. So for now, we are seeing gold move in a zigzag form. Okay, a zigzag form. We may have something like this to the upside, or something like this. Something like that may occur. But either ways, we are still good. So we have marked out our highs and our lows. What we'll do now, we'll start going down the time frame and see what gold has to offer. But for me, on a temporal note, maybe the next one, maybe the next let's say next 4 months, gold will be bearish. The next 4 months, gold will be bearish temporarily. All right. So let's start going down the time frame. Okay. Here we are on weekly time frame. We're seeing that bullish moves up, down, up, down. So right now, I want to see this level taken out properly. This level is taken out properly on a weekly time frame. Then we know that gold is going to target to come to the downside on the weekly time frame, right? Gold is going to be targeting this way. If that level is taken out. So we should be looking at around 85 pips from there on the gold. So for now, we'll still go down. We're not taking our trades here. We'll just keep trying to analyze to see what gold is doing and all that. And one other thing you need to understand is that the behavior of a trend is directly related to the trend itself. What I mean is, if gold is on a bullish trend, on lower time frame, you will be seeing more of impulsive move than corrective moves. If it's on a bearish trend, on lower time frames, you'll be seeing more of an impulsive move to the seller side than a corrective move to the buyer side. So right now, if you check closely, you see that gold is more bullish and impulsive, right? But when it wants to correct, it corrects with a lot of wicks, a lot of candles and all that. When it wants to buy, it buys with so much strength. So that's what I'm saying. Right now, you can see, because gold is a bullish asset, you can see that it has been correcting. When it gets to this place, you see something like this. All right, so that's good for you. That's good. Let me clear up this from the charts. Is gold on a daily time frame. So if we want to still work on this, what's it called? We want to still work on our daily time frame structure, where we can now go to lower time frame like H1, M30, or H4 to take our trades. We have to go this way. We have to come here, still pick our levels. So there's an internal liquidity here, or there's an internal structure or low there. on gold on a daily time frame, as you can see that price has broken that level. So you see something like this, broke it, but it was consolidating, so you'll not notice it, right? So we're expecting that price comes back to that level for doing something like this, and then taking another level, then up, we come back to this level again, and we go up. That's what I'm expecting from a structure perspective. But if that does not happen, then we'll just be patient to see what gold does. So on on 4 hours, gold is bearish, kind of. On daily, gold is bearish, but it's on a corrective move. Okay, it's bearish on a corrective move currently. It's bearish on a corrective move currently. But anything can happen, and the market is always right. Anything can happen, and the market is always right. So what do we do now? Now that this is what we are faced with on gold, what do we do? All right, for me, I will go a little bit lower and mark out my structures correctly and see how price respects those structure points. I'll just mark out my structures correctly and see how price respect the structure points. Okay, it's established that gold is from daily time frame downwards. On the time being, gold is bearish. That has been established, right? So it has been established that gold is bearish, right? It has been bearish for over a while now, 2 months or so, and it has been selling and all that. So let's look out for how we can take advantage of that. So if you want to take anything now temporarily, you should be looking out for a sell than a buy. Anything other than a sell will be a counter trend, and it will be dangerous to do. Okay, so let's start marking out our levels on H2 on a 2 hours time frame. Let's mark out our levels on 2 hours time frame. Most recent levels, obviously. You don't want to go back too far. Just mark out your most recent levels that are obvious. If they are not clear, you can change time frame. But I think these are clear enough. Don't go too far. Don't go too far. I wouldn't want to go too far. But this is okay for me. This is okay for me. So that you can see that clearly. Let me increase bolding this line so that you can see that clearly. So can you see that? Yes, I think you can see that now. So you can see that gold is bearish, right? On a lower time frame. So let's go lower again. Let's go lower to see where we can take trades if it's possible. We can't take trades, okay? So let's mark out another most obvious structure point is here again. So let's mark out that point. So we have that point and this point. So right now we're having something like this. Okay, we're having something like this. Is what we're having. So if we have something like this, it will be nice, right? But you know, it's going to be consolidated because the general trend is still bearish. So how do you draw your Fibonacci tool now is what you should be looking out for. Since you know that gold is bearish, how do you take advantage of that bearish move? How do you take advantage of that bearish move? So you just pick your Fibonacci to become, this is going to be, let's go by marking out that point A here is going to be our point A. Okay. It's going to be our point A. Is going to be our point B. It's going to have point B. Point A and point B. So it's as simple as that. What do you do in my point A? You pick your Fibonacci 2 and then you drag it from point A to point B. Point C is unknown, and that's how you come to point A, drag your Fibonacci 2 to point A and B. So properly marked. So as you can see now, gold has been mapped out. What is the mapping? We have mapped it out for a sell. So whatever it gives to us right now is what we will take. Okay. Gold can decide to go lower from 50 Fibonacci level, or is a 50 Fibonacci level, or a 61.8, or 78.6, or 88.6, seeing that is bearish. Sorry, seeing that is a safety asset and it's always buying. So let's go lower time frame and see possible places where there are orders that gold wants to come and take before it keeps going down. Good. I think I've seen one obvious point where there are orders that gold will likely come and take, which is here. Are you seeing that? This is on M45. So I'm racing to see that gold comes and take some orders on M45, just like EU did. So gold is coming here. So I'll be placing my, I'll be placing my pending order, waiting for gold there. Maybe my first take profit will be here. So this is roughly, that's roughly 30 pips. Maybe 30, 305 pips. Yes, 30 pips if I'm not mistaken. Your stop loss will be 19 pips. The risk to reward is 1 to ratio 2.5. You can increase it from here. You can increase it. You can increase it to this 1 to ratio 3. It's fine, knowing that gold is still going to go down. So that's it on gold. That's it on gold. That's basically it on gold. So point C, which is our point X, unknown, is somewhere here. That's where I'm going to choose because it has showed me that the market has showed me by observation and knowledge that this is where there are others that are left on peak and gold is coming for those others at that point. So when it hits this point and I see a rejection at that level, I'll be taking my sell, taking my sell to the downside from there. That's where I'll look out for myself. All right, guys, thank you so much for joining me on this session. I hope to bring more session to you. Maybe when next one will take out time to analyze the chart properly, we'll be looking out for US30, right? US30, another asset that's US30 or the US oil. Either of those assets is what we'll be looking out for. For now, apply proper risk management, follow your plan your trade, and trade your plan, and you keep growing consistently. Cheers, guys. See you in the next video. Bye.